So folks, as promised, here's the follow-up video to Monday's video. If you haven't watched it, check it out up here on Facebook's analysis. So they just reported earnings, and as predicted, everything worked out in my favor. They reported earnings and they were down. Like, we knew that was going to happen. Like, Google just reported their earnings and they're down because of ad revenue, as well as Snapchat just released their earnings not too long ago, and obviously they are an ad revenue based company as well. So with Meta, they're in the same ballpark, and the price has been going down quite a bit, but I'm not too concerned about this. Look, they've been on such a good run that them being a little bit humbled by missing earnings by just a tad, isn't it's going to take away from the fundamentals of this business, based off the fact that they have a really strong balance sheet. So take a look at this, folks. It closed at $129.82 at the time of recording this video. And as we are in the after hours, it is currently down over 10%, almost hitting 11%. And I can see this company going lower and lower and lower. Now, this is the type of scenarios, folks, that I like to look forward to, because I believe this is a complete overreaction of the market. I think over the long run, I think Meta is going to be a solid platform, and they've proven to be a solid business. They have a lot of cash on hand. They have low debt. They have increased revenue growth. Now, with their revenue taking a step back as we go into this recession, it doesn't really bother me, because listen, what my outlook is the next 10 years. Now, this recession may be, let's say it runs its course of, let's say, 8 years, but I know, as a business, they are very cash positive. They know how to keep themselves afloat, and they'll be able to weather this recession no problem. Likewise, Google's in the same boat. So when I see a company like this with strong fundamentals and strong balance sheets, and everything is in their favor, and their price comes down, this doesn't look to me like a risky stock. For me personally, I'm going to dollar cost average. As I said in my previous video, I said if the price continues to go down lower and lower, I'm going to dollar cost average further into this business. And I'm loving this. Yes, take a look at that, guys. I want everybody to keep reacting the way they're reacting, because you know what? It just doesn't make sense to me. So look at that. Revenue, $27.7 billion versus $27.4 billion expected. 1.64 versus 1.89 expected for earnings per share. Now, operating loss. So Reality Labs operating loss $3.67 billion versus $3.09 billion expected. So Meta also issued that Q4 revenue guidance of between $30 billion and $32.5 billion, while the street was expecting $32.2 billion. Company also announced that it'll be pacing Reality Lab investments beyond 2023, but that spending will significantly be significantly higher next year. Okay, interesting. So yeah, and in this article, like what I just mentioned here, I didn't even read this article yet, but yeah, Google and Snap, they're all suffering from the same thing. They're all suffering from the ad revenue loss. And it's gonna happen, folks. They had such a good run over the last couple of years, especially when people were at home doing nothing, being inside because of COVID, on the computers. What do advertisers have to do? Well, they just slap advertisements everywhere. Spend, 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 spend. And they were all over those platforms, over Snapchat, over Instagram, over Google and YouTube and all of the other things. So now that everybody's out and about and back to work, advertisers are probably pulling back a little bit. They're saying, well, everyone's out doing work, not at home looking at a screen, so why are we going to spend this money? As well as with interest rates rising and all these other things, cutting back on costs just makes a lot more sense for these companies, and thus leads us to where we currently are today, with a lower revenue reported. And obviously Meta, Facebook, it's one of the FANG stocks. It's one of the companies that are leading the S&P 500. It's one that everyone has their eyes on. And when everyone has their eyes on this stock, what happens is you have a lot of people going with the crowd. You have a lot of people that are not independent thinkers, and they can't see through the lines. They can't read through the lines, and hence that's why we have scenarios like this, where you have Meta at $129 of closing, now currently down 11%, approaching 12%. Look, guys, this is a sale. Thank you for all you weak hands out there that have put this company further on sale, because now I could pick up this amazing business at a great price. And if you're looking for any other reason to get into this company, take what I'm saying as a grain of sand, because you have to ultimately have to do your own research. This is not a video to say, yes, go in and buy Facebook, but it's more so of, if you are currently invested into this company, do not fear, because their balance sheets are what they are. Their cash flow is what it is. Their debt levels are what they are, and it's all solid. It's the perception of the market that they think this company is worth less than what it currently is worth. And if you need more clarification on that, definitely check out my last video that I made on Facebook. If you haven't, I'll probably just put it back up here again, but it's in the description box below, and you can see what my analysis is on this company and what I think it can grow by in the next 10 years, and I can prove to you that it's truly undervalued from a numerics perspective. Anyways, folks, that's the video. I just want to make a quick follow-up video of what I believe is going on with Facebook. And obviously, it being earnings seasons, people are all these companies are getting rocked, but it's fine, because now we're able to get these great businesses at lower prices. Anyways, folks, I'll see you in the next video. Thank you.